Welcome back, dear traders. This is the latest review of the US stock market by InstaForex. A reassessment of the US monetary policy may be on the cards today. Investors seem to be ready to accept a higher interest rate. Will they lose their risk appetite? What will Fed policymakers say? And what is Joe Biden's outlook on 2023? There are the main questions of the new trading day. On a Monday, US indexes closed in the negative territory, but it was not a rout. Most indexes posted relatively minor losses. At the closing bell, the Dow Jones Industrial Average went down by 35 points, or 0.11%. The Nasdaq lost 119 points and dropped by 1%. While the benchmark S&P 500 slid down by 0.62% to 4,111 points. Indexes were mixed during Tuesday's premarket trading. Dow Jones futures decreased by 0.15%, while Nasdaq and the S&P 500 futures added between 0.08% and 0.32%. Today, the S&P 500 is expected to trade in the intraday corridor between 4,070 points and 4,180. On a Monday, US stock indexes declined as traders adopted a wait-and-see attitude once again. Last week's strong US labor market data is looming over Wall Street. U.S. Treasury Secretary Janet Yellen stated on Monday that the United States might avoid a recession thanks to lower inflation and the strength of its labor market. However, steady job growth may lead to the Fed to tighten its monetary policy even further. U.S. equities, partly mega-cap stocks, rebounded strongly in 2023 amid hopes that the Federal Reserve might ease its aggressive tightening cycle. However, market expectations changed on a Friday, with the money markets now expecting the interest rate to peak at 5.1% in July. Nevertheless, some meme stocks such as AMC Entertainment and GameStop jumped by 11.8% and 7.2% respectively on Monday, indicating that there is still risk appetite in the market. Shares of Tesla added 2.5% after jury ruled that the company's CEO Elon Musk did not deceive investors with his Twitter posts. In other corporate news, Tyson Foods lost 4.6% after reporting weak earnings and revenues for the first quarter. Meanwhile, some Chinese stocks listed in the US fell amid geopolitical concern following the shutdown of the China spy balloon by a US fighter jet on a Saturday. Most sector indexes on the S&P 500 declined, except for utilities and the consumer staples. US indexes consolidated slightly on Tuesday as investors await a key speech by Jerome Powell, and today's remarks by the Fed chairman will be the first since Friday's release of a US non-farm payroll data for January. Expectations in the futures market are now fully aligned with the outlooks of several Fed policymakers. Market participants now see the Fed funds rate peak above 5% this year, surpassing the current range of 4.5 or 4.75% by the end of the year. Other Fed policymakers have regarded the strong non-farm payrolls report as a cause for alarm. Raphael Bostic, the president of the Fed Reserve Bank of Atlanta, said on Monday that the tight labor market would mean the Fed would have to do a little more work. In Australia, the country's central bank hiked the cash rate by 25 basis points to 3.35%. It's the highest level in a decade. The Reserve Bank of Australia said in a statement that further rate hikes will be necessary, contrary to market expectations. Today, US President Joe Biden will give his State of the Union address, his second such address during his tenure. Investors will closely follow Biden's speech and his standoff with the U.S. Congress on raising the debt ceiling, and the U.S. president is expected to insist that raising the debt limit is not up for debate. In the meantime, shares of British Petroleum jumped by almost 4% after the oil giant posted record high earnings of $27.6 billion. BP also increased its dividends by 10%, and this strong earnings report followed last week's reports by BP's competitors, Shell, ExxonMobil and Chevron, which were also positive. The US dollar index has continued its advance, gaining 0.2% intraday and hitting 103.8 points. The index trajectory today will strongly depend on statements by policymakers. As a result, the USDX might move in either direction. Today, the intraday corridor for the US dollar index is defined between 103.20 and 104.30. Besides, the current rise in the US dollar will hardly turn into a new long-term uptrend. Having fallen by about 1.5% in January, it managed to offset its early losses after upbeat non-farm payrolls data released last Friday. And this report made traders doubt the likelihood of a monetary policy easing. Speaking about the unexpectedly strong increase in the new jobs in January, Atlanta Fed President Raphael Bostic said on a Monday that the central bank may raise the key rate higher than previously expected. Speculators immediately factored in the chance of the key rate rising above 5%. In the short term, the US dollar is likely to show moderate growth, especially if fresh reports are positive and the Fed undertake at least 2 more increases. If Jerome Powell makes hawkish statements, the US dollar index may start its rally today. However, other economic indicators signal a decrease in inflation and a slowdown in the US economy. It means that the upside potential of the US dollar could be limited and shaky. The Canadian dollar has stabilized today before the opening. The USD CAD pair dropped by 0.02% to 1.3440, and it's likely to move in the range of 1.3390 and 1.3480. The loonie is up despite a strong US dollar amid positive dynamic in domestic reports and a rise in oil prices, and the local economy expanded in January at the fastest pace in 8 months as employment increased and supply deliveries speeded up. Iowa Purchasing Managers Index data showed on Monday. The seasonally adjusted index rose to 60.1 points, its highest level since May. Oil prices have been climbing for the second consecutive session amid optimism about improving demand in China and concern about a supply shortage after the closure of a major export hub after the earthquake in Turkey. Brent crude futures added 1.1%, growing to $81.04 per barrel. WTI crude rose by 1.5%. Prices jumped following the IEA forecast. The agency assumed that China would account for half of the demand growth. Saudi Arabia, the world's largest oil exporter, raised prices of its flagship crude for Asian buyers for the first time in 6 months amid an expectation of a recovery in demand. And this is why oil prices are now climbing, boosting the loonie versus the US dollar. Crypto traders are also looking forward to Powell's testimony. Yesterday, Bitcoin managed to settle above $22,000. It's trading steadily near $23,000. Its intraday gain totaled 0.3%, so the digital asset approached $22,980. Ethereum, Solana, Ripple, and Litecoin added 0.2 and 2.4%. Despite the pressure on the crypto market, the volume of Bitcoin options traded on Deribit, one of the leading exchanges for crypto-focused derivatives products, grew by 82% in January compared to December. The options increased by 38%. A surge in volumes also indicates that investors are uncertain about the main trend in the crypto market. For this reason, they prefer less risky assets, for instance, low reward options, to buy Bitcoins or Ethereum. It seems that crypto traders are monitoring the upward potential of Bitcoin and Ethereum. However, they are also worried about a pullback after a sharp jump in prices. Investors are now waiting for clearer signals. And Jerome Powell's speech at the press conference could provide more hints. Bitcoin is expected to trade in the channel of $22,500 and $23,500. And that's all for now. Keep monitoring the financial market situation. Subscribe to the channel and see you in several hours.